See my screen, Alpha? And we'll probably do a coin with a brand new chart. MVT probably USD is fine. Okay, great. Brand new chart. All right, so let's talk about order block. Order block has a few very important concepts to remember before you even get into using order block. It's very important to understand. Hey, what's up, Sky? It's very important to understand how to use order block and under what circumstance and conditions would order block be more respected. So, like before even going in about identifying them or finding them, it's probably knowing under what condition they would actually be more respected, right? So there's a few things. One is order block work better on higher time frames. So basically means that compared to 1 hour versus a daily, the daily order block would be a lot more respected, right? Just because in each candle there's a lot more volume, a lot more liquidity. And order block really is just a place of liquidity, right? So the more liquidity you have, the more likely that the order block would have some sort of reaction. So that's the first thing. Second thing is order block is not absolute, meaning when you trade with order block concepts, you want to make sure that you trade with the trend and not against the trend. So for example, right now we're obviously in the uptrend. And the reason why we're in the uptrend is because we just had this double top here in USDT.D dominance. And we literally just broke below some of the support resistance. And there's nothing here, right? There's nothing here to stop the price from going down all the way to red circle. Meaning the harder we dump, the more we pump, everywhere else, right? So I actually had a setting here when it hits this, that's when I'm going to take my TPs. So you see a lot of the price action started to pump recently, right? That's usually because of that. Okay. So coming back here. So for instance, you mentioned the 4 hour. An order block is a very simple concept of an engulfing candle, right? So it's always a set. So if you kind of just look at these. So this is what we call a set. You have a candle that's longer and bigger after the candle before that. Usually they have the same either bottom or top. That basically constitutes as a order block. All right. And with this order block, what you want to kind of realize and how to draw it is usually you want to go from the wick to wick of the previous candle. So for instance, from here to here, and you simply pull it out, and that becomes the order block. Now, the lower time frame you go, so let's say if you go to an hour, you see how this order block is now kind of split up into 4 different candles. That's kind of what it looks like. So when you kind of split things up like that, that's why you kind of want to label your order blocks, right? You want to know under what circumstance that order block was. So this was a 4-hour OB. So you can put that on to the center or the right, so you can kind of remind yourself what this order block was drawn for. Because otherwise, if you're jumping between time frames, sometimes you will forget. I know I draw an order block, but I'm not sure what it was for, right? So it's a good idea to keep it tidy. And you can tell like there's another order block here, right here, right? Engulfing candle, same ideas as we kind of talk about it. The second candle is always bigger than the first one. And that's constitute what an order block is. So because this is a 1-hour time frame, I probably wouldn't draw it from wick to wick, more so just from the candle bodies. And then what you're going to have now is an overlapping order block. But the problem with this previous one is that it's already broken through. You see by this wick here, so which then constitutes that this order block exhausted. So this then would not be considered at all, right, in the future price actions. Okay. So this is a very important concept to know that a few things. One, order block is something you want to use with the trend. Two, order blocks works differently at every time level, right? So every time frame. And three, Order block is something that you want to draw from wick to wick and a higher time frame, or only the candle body on the lower time frame, right? Now, if you kind of look at this, this is not an order block, right? So if you look at over here, it is an engulfing candle for sure, but you see how the bottom is not lined up, right? So usually this is not an order block because the way I was taught, it has to really line up in order for this to be shown as an order block. But what this is a demand zone, which we'll probably get to in the future, right? So a demand zone has a certain amount of price action, right, that allows it to be used as its zone instead of a block, right? So that's something that we'll talk about in the futures. Okay. So far, any question about how to identify order blocks? Once you guys understand what they are, we'll go ahead and go back in time, through the replay button and see how they work in action. What's up, Dick? Okay, understood. All good. All right, one of you give me a date. Just any date between January 2024 to now. Just any random date. Yeah, we're good. We're good. 25 Jan. Okay. April 1st, April 4th. All right. So one of the things you can do if you're trying to, retest, right, or to backtest. Sometimes, if you do it the way of this, you kind of look at the chart and then you try to find a random place to replay to. You already kind of see what's going on. And then sometimes it's hard to unsee what you know. So let's say if you replay back to here, you already knew there's going to be a huge upside. So that will kind of mess with your bias, if anything, right? So a better way to do the retest to be a little bit more on a neutral standpoint is you can click on this calendar right next to the time frames, right? On the bottom. You click on that, you can actually select a date. So you mentioned January 25th. So we'll just go to 25th. Click go to, and then make sure you select, let's say, the 1 minute time frame or the 5 minute time frame. And then you simply go here, 25th, go to. Okay. And you see it's broken up into 5 minutes, right? Don't worry about how it looks weird right now. And then you can simply get your replay. Hold on, let me just end this right now so it's not all wacky. Okay. And then you can simply get your replay to either the end of this date, which means that all price action, right, will begin after January 25th. So when you click on that, and then you simply go back to whatever time frame you want to look at, right? This will be January 24, which is the last date. Okay. So now we have a price action we can work with, and we don't really know what's going to happen afterwards, right? So we'll go on 4 hours first. And again, this is January 25th of 4 o'clock, right? We're already in replay mode, back test mode. Let me know if you guys understood how I got here without being able to, have a bias on looking at how the chart is. Does that make sense why I did this? You guys? Anyone there? Okay. It makes sense, right? Just want to make sure you guys know why I did that. Okay, cool. So now that I'm here, we can now start looking at the order blocks. You always go from higher time frame down. So if your goal is 4 hours, you probably would jump at least 2 sections and go to the daytime. So this is the first thing. Like if we're on trade on the 4 hour, we'll look at order blocks on the daily, right? So here on the daily, a few things we start to recognize. The first thing we want to recognize is fields that hasn't really been tapped, right? So if you kind of put this here, order block, bullish order block, we have a pretty obvious order block right here. And this is more of a daily. So again, keep it tidy. Oops. So we have an order block right here in the bottom. You guys all know why I drew that, correct? right? So based on everything we said so far. And you can tell that there has already been one touch here. And it didn't really break through the half point, meaning that there's still liquidity in this order block, and so it can be used. But this proves a point, right? It proves that every time when the price action gets to an order block, it rebounds. And don't underestimate how much this rebound was, because it was still about a 14% rebound. Meaning that if you had a trade of $1,000, right, you made basically $140, right, just from this. And this is only within 2 days. Okay. Yeah, it is sick. I know. But it's a very, very fundamental fact about how to read charts. And if you all you know is support resistance and order block, you'll be able to make money, right? As long as you become selective with what you trade. This will almost work every time. Okay. But we haven't even got into later on when we find trades and start kind of placing trades and see how it plays out. Okay. So the very first thing you want to identify is where are the order blocks. On the top, there is another order block that I see. So like right here, and this will be, the top is usually just bearish order block, right? Because usually you need to have a price action coming down, right? So the top is usually the resistance, the bottom is the support. So over here we have another daily order block right here. And I hope you know why I drew it there. Well, actually, this one is not fully engulfed, so I probably wouldn't do that one. So let's move it to here. This one is engulfed, right? From the same bottom, have a much bigger, candle body to overcome this. But what I don't like about this order block is this gigantic wick. Usually the gigantic wick means it's some kind of manipulation and whatnot, right? So, but it's still there's liquidity. As far as if we're looking at the liquidity standpoint, this order block is still valid. We also have another order block right here, but this one is already taken out. So if you kind of look at this, literally it's been taken out since here. So if I go back and just take out extension, right? So this order block hasn't really done much here. That's kind of like my point. Order block is not always going to work 100%. So you still need other things to confluence with it, right? Now let's find some more. So on the bottom here, that hasn't been used up or touched. There really isn't that much clear order block. Like this is one that potentially can be think of as an order block potential. So if I pull this out here, or if I just extend that to the right and make that a bullish order block, okay, we'll see how the price action develops. We're right now here. So let's play 3 times. Okay, check this out. So then the second time we got into this zone, right, this order block, we actually have another huge reaction. Pretty significant, right? And we haven't really allowed the price action to end. Okay, but you see how this price action completely blow through this order block. Like I mentioned earlier, I don't really like this order block just because there's more wick than body, right? So maybe that's one way you can identify how strong the order block is. That's the first point. The second point I want to mention, for those people who are a little bit late, the very first thing I mentioned, that order block works better with the trend and not against the trend, right? So if you look at this, we have a very, very obvious uptrend, right? Do you guys know what I'm talking about? Right? Obviously, you have your first high, low, second high, higher low, right? So this is a very obvious uptrend that we're literally just going up, down, up, down. So we're most likely going to create a even higher high right here, right? So if you think about that, then this order block here wouldn't really play too much of a resistance. But if you look at what really happened here is during the whole price action, this wick was able to get some resistance and did come back down. So that's to prove that this order block is somewhat valid. The problem with the validity is that even though it's a valid order block, it didn't have enough liquidity to consume or to absorb all of the buying action, right? All of the volume that basically compared with this, or came with this extreme bias of purchasing power. So the order block didn't have enough volume to absorb all of the purchasing power, and that's why it was broken through just like that, right? So you see how it just completely demolished it, right? Now, if we were to go back even more, let's go to weekly. This is kind of where we are. You see how we also have another like support resistance here and things like that. Like they completely ignore all that, right? So it's very important for you guys to understand. The only thing that probably will stop this type of buying momentum is the all-time high, right? Which is then the green line here. Let me just address this with this. Okay, so here's the all-time high. Let's go back to daytime chart and see how far this will play out. In this case, the buying power was so strong, it even completely exploded the all-time high. You guys see that? So in this case scenario, I wouldn't be able to say that, through just order blocks alone, we would be able to anticipate this type of movement. Because usually this type of movement is beyond simple technical analysis and price analysis. This type of movement is usually probably paired with some sort of news or some sort of event that's done to FET specifically. So if you're an advocate of FET or you're a proponent to FET and you've been studying it, you probably know what happened, during somewhere in February, right, where FET completely shot up. So this is beyond the scope of order blocks, right? Hopefully that kind of help you guys understand what it looks like. But let's kind of come back to the concept of the order block as we develop our price action here, the second time it touches. And basically what we're looking at here is if we can combine order block with Fibonacci, and if I just use the OEM one, this is OEM modified, right? So it's easier for you guys to see. So at this point was the highest point before it start having some correction. And if you can see that the middle of this order block lines up almost perfectly with 0.5. So this bounce had multiple confluences in terms of how it's going to go. If it was based on order block alone, you probably expect some sort of retracement, right, by the order block. But again, because of this movement, right, this purchasing movement, it was beyond the ability for this liquidity to absorb all. So that's why I always urge you guys to be careful, and you never want to short against a bull trend. So over here, I want you guys to really understand two very important concepts. I think new traders always forget, right? The very first concept is you trade with the trend and never against. Let me say that again. You always trade with the trend and never against, right? So in this case, the trend was very clear. It was very bullish. So you probably wouldn't be setting a short, just because there's an order block here. I hope you guys really got that, right? That would, in this case, was suicidal. Okay. And that's a very, very common mistake I see all the time. Second is you can always place your longs, right, at the point which it's with the trend, because we always know, things is going to retrace, right? So as we know things is going to retrace, it's always a good idea to be able to place your trades by the order block, right? And then basically set up your stop loss below the order block. Okay. So Dick has a question. How can we predict whether Fibonacci plus order block will do a bounce or just break through? So you see, the prediction is never 100%, but when you're trading with the trend, usually means there's a lot of buyers with you. So you have a much more likelihood of a correct response at the order block level to your advantage, right? The question is, we don't know when the trend is going to reverse. There's going to be, other indications or other things, price actions that's going to help you identify the trend reversal. But usually trend reversal, especially during long time frames, will have a pretty clear indication of what it's trying to do. right? So that's something you should remember. Okay, so that's that. Now, if you kind of pay attention here, you'll see that there's also a retracement here. It just in the daily time frame is hard to see. Okay, so if we go to the 8-hour, let's take a look at this. So we have some sort of breakthrough, right? And then we created an order block right here. And you can see from this standpoint, when it came down, right, to basically after the order block was created, when it came down, it basically closed above the block, again, came down again, closed above the block. And then we have another retracement that didn't even touch the block, which then created another block. So you'll see the price action will continue to play out. And I really like this block. The only reason why I like it so much is because it has a pretty large candle body, very small wick, right? And usually that's a good block. I know you guys will probably be saying, well, James, it's not perfectly lined up. Well, nothing is perfect, right? But, you know, if it's close enough, usually you can kind of use it. And you'll see that it touched multiple times, but each time as it's ranging, it constantly just went up. So if you place your trade by the block, with the trend, you can always kind of place your trade right at the line of the block. And you can have your stop loss below the line of the lower block, right? And then you'll be able to set up your trade. If you're more conservative, you can always set up with the previous highs or the swing highs. You can either be here or here, depends on how you want to see it. But you know, whatever you do, it's like almost a 2-hour trade. And it's not very hard to identify these. And usually they play out, right? So even if you use the same concept here, it also plays out here, right? Very quickly. So these are kind of ideas you can, you know, play with. In 8 hours, there's about three bars for each day, right? So if you place your trade here, literally within the same day, this trade would have been played out. Okay. Same thing here. If you place your trade here, in the beginning, it wouldn't really play out. You wouldn't be able to get to your final TP, but you'll probably get to your TP1, you know, within the same day. And even at TP1, it's still almost, you know, a 1 RR, right? So meaning that if you risk $100 here, you probably made $100, right? So these are really good some concepts to use with your order block. Now, if we're looking at this ranging and price action development, so if we look at this and we use the previous retest as the point for our Fibonacci, you can see that this order block again lines up with the 0.5, right? And that's kind of where all of the touches were, almost precisely is. So if you kind of look at this, that's where it touched, right? This is where it touched. So if you want to be someone who can really, you know, snipe, right? So pairing Fibonacci with order block is a wonderful thing to do. Okay, it kind of tells you exactly what's going on. All right, good. So now that we have that, the next one here, if you see that we have a long wick down, right? Even though it's one candle, we can always go to the lower time frame and kind of have a better picture about what is happening. So in here, this is more like a retest, right? Because we have a breakout at this level, and almost immediately we range a little bit, and we had a retest, and then we basically ran up again, right? So if I delete this fib, let's take a look at, in here, there's more of a zone, not a block, right? There is an order block here, a very tiny one. Let me just enlarge it for you guys to see. So here we have an order block, and you'll see that there is a retest of this order block. Once you see the pattern, it's hard to unsee it. It's quite incredible, right? So you see how we touched it right here. If you want to be extremely precise, this order block has the coordinates of 1.0697. Remember this number, right? 1.0697. If we look at the low here, is 1.07944, right? So the low on this candle, 1.07944. So it didn't quite touch, if I really enlarge, you see how there's a tiny little gap here. So that kind of comes back to the idea that when you're getting too extremely precise, sometimes you miss out trades like this and you kick yourself in the foot. So what you would do is instead of laying your trade right on here, what you wanted to do is probably just be a little bit above it. And all of a sudden the trade is now in action, right? So you can always have your trade right on the top line of the box, or you can have a little bit above it. I normally do a little bit above nowadays just because I missed out on too many trades because of these, stupid 0.1% deals. All right, anyways. So here's a retest. So a retest is also known as a confirmation. So once you have the confirmation, a lot of the times you can kind of understand that it's going to have a pretty, big move as it retests up. This is not a retest. So if we use Fibonacci from the previous retest to the high, you'll see that this retest actually hit the 0.786, which is a deep retracement. And when we have a deep retracement, what you'll know is that this is going to have a much more parabolic move. Every time you touch the 786, the up is going to be much higher. I'm not sure if the time frame lines up with the dump or anything like that, but this is just a basic concept, about order blocks. So obviously, as you get more advanced, you'll be comparing confluences, additional confluences. You'll be adding a bunch of other things to see the correlation between the markets, BTC pairs, right? And which one is going to outperform who. So those are later on as you kind of learn the fundamental blocks of knowledge in trading. They kind of become Legos, right? So you can kind of build them on top of each other, right? All right, point set. Again, some sort of order block here. And you'll see that this is the time where the retest completely exhausted the order block. In this case, it actually did touch the bottom of that line. And then we had a parabolic move. Okay, we have another order block here. One thing you realize is as we're trending, if the trend is strong, every time we trend up, it will leave bullish order block behind. Did you see that pattern, you guys? Right? So every time, like the question is, how do I know the trend is going to continue? So, well, you're looking at this. You're looking at basically every time when the trend is going up, if it leaves a whole bunch of, bullish order block behind, what that means is if the price action were to then develop and try to come back down, it's going to have some sort of resistance or a support, sorry. It's going to have some sort of support to be able to continue to push the price upward. If the trend was going up, but it's not creating order blocks, right? And leaving a trail of order block behind, when it falls, it'll usually fall right through. So here's a great example. In this example, we had a trend, but you see how there is no order block down here. So when it falls, it has a pretty significant fall, right? Because there's no order block being created as we were going up. So this wick was no surprise, right? Because there's a whole bunch of liquidity sitting here and there's no order block to stop it or to create support for it. And you see over here, then we have some kind of double top and almost triple top. So if I continue to play this, I have a suspicion, and here's just a suspicion, right? The price action will then continue to develop downwards, and it'll probably hit one of these blocks. So in those cases, if this is real time, and obviously I don't know how it's going to play out because we chose a random date, right? So I will then definitely place my order block slightly above, my trade slightly above this place. Oh, by the way, sorry. Missed out on this order block. See that right here? Being generated right here. So we have another order block here. So then I'll probably, and this one has not really been touched before. So I'll probably place my trade right here. I will have my stop loss at the bottom of this block. And I would have my DCAs, right? So my entry will be right here. Okay. And my DCA1 will be at the bottom of the block. That's my DCA1. My DCA2 will be at the close of these candles, or if you want, you can be at the 50%. This is what Sherlock likes to do. When you have a long wick, Sherlock calls it the demand zone, right? So I would have my DCA2 at the 50% demand zone. And I would take profit based on the previous support resistance. As you can probably see, a support resistance line somewhere here at the bottom here, right? So that's where my take profit would be. So this will be just a quick 2 RR trade in the 4 hour. Let's see how it plays out. Stop loss software hard. If you're new and you're not very confident with your stop loss, I highly recommend you just do hard stop loss. But if you've been trading a while, you're very comfortable leaving your stop loss manual and setting up, setting up different signals or setting up alerts for you to be able to kind of wake up and, close the trade if you need to. You also kind of want to consider time zones, right? Because sometimes the liquidity comes when certain sessions, right, are in sessions such as European trades or the New York Stock Exchange. So if your time zone doesn't really align with those trade time frames, then you want to be careful with soft. I personally believe in soft as well, but I have liquidated my paper trading account because I wasn't careful with soft stop loss, right? So there is also that when you're not being careful. Yeah, Dick, that's not sustainable. All right, anyways. So again, we're looking at this. This is kind of like a quick prediction. I'm not sure it's going to play out, but we have the first top, second top, almost kind of like a third top, right? So my guess is all the price action is telling me we're due for a retrace. If I were to basically pull out my Fibonacci tool up to the top, you can see that, in this case, the 786 is right around this area. So if you want to be safer, you can actually pull your entry here and then have your DCAs at the order block if you want to do that. So you can adjust a little bit. Or if you have FOMO or you have a trading account, it's like this will be a little bit more long term, right? Because the price action is right now here. So that's a 7%, 10. This is not really a long term. This is definitely a short term trade. So what you can do is play it out and see how it goes. Okay, so it's ranging a little bit up top. There we go. See how it completely knocks everything out? And it went right to this fit point. Right? So now you know by just doing self-stop loss is good, yes. But if you're doing spot trades, right, then you would immediately almost make money, without worrying about the futures. So that's why I said new guys who don't really understand fully how to do futures, if you stay in spot, I mean, obviously you could have made more money if you entered down here, but here is also not a bad spot, right? Because if you look at it, if you DCA them correctly, you'll probably be somewhere around this zone as your average. You will still make about a 12% return here. Okay? So even though the order block here does exist, like these type of things we really can't anticipate, right? Unless you have, of course, additional other confluences and everything. And also broke through this order block. So this was a very parabolic down move. Okay? But I kind of knew that that's coming just simply because we have so many, resistance up here. So we knew that it's going to come down, right? The question is how you're going to play this out. And the previous line we draw here is exactly at the 618. So we'll see how it goes. Let's play a little bit more forward. Okay, now we're breaking above. So you see, why does it come down? Well, in order for the price to have a new high, you kind of always need to know what the market is trying to do, right? So the market is trying to grab enough momentum or liquidity. You have to understand, market moves by fuel, and fuel is basically what liquidity is. So when they come down and do liquidity grab like this and basically take out all the future setup that have their stop loss below the order blocks, right? They kind of knew that. So they basically liquidate all of those stop losses. And what liquidate stop losses is once your stop loss is hit, immediately your order become a market purchase, right? So all these orders then become liquidated, which then gives the price action enough power to then make a move. So in this case, if you did spot, which I highly recommend that's what you do, right? So you have a 30, 40, 30, right? So your average would be somewhere around here. This move would have yield you about 30%. So again, if you enter here for $1,000, you make $300, and this is a 1 hour chart. So what that means is literally within, let's say how long this took. Date range, okay? So within the matter of just 11 hours, you guys, right? So you made $300 in 11 hours. And that's if you only have 1,000, right? So if you have more, you can always make. Okay. Any questions on how order blocks work? And we go to the higher time frame. Remember what I told you guys about earlier? If I hide all the drawings, what I told you guys is when we have a good trend, we're supposed to create order blocks on the way, right? You see how there's nothing here. That's why this wick is so much down. It makes sense, right? So this is a daily time frame. We have a zone and a block here. Yeah. So one more time, order block is created basically based on the two candles, right? So you have, oops, here we go. So you have something we call an engulfing candle, which is a bigger candle than the previous one, right? So when you have something like this, a setup like this, the previous wick to wick becomes the order block. So how you would draw that is go from using the magnet tool, go from this wick to this wick, and you simply pull forward. So this would then become your order block. Well, once you do a lot of that, like there's an order block here, you don't really need to draw it. There's order block here, right? You start just to recognize where they are. There's an order block here, you know? So you kind of start to realize. Okay, it's fine. See you, Alpha. Right, anyways, so that pretty much concludes today's class about the basics of order block, knowing what they are, how to identify them, and basically see them play out in action to kind of prove to you guys a point, right, in terms of how to use it. You're very welcome, Alpha. Hopefully it was beneficial to you. If there's no other questions, we'll go ahead and end the stream here. We'll try to keep the stream, in bite size, so you guys just learn something each week and you can apply them. Right, so you start asking different questions as you go. Hopefully it's because you've learned something. And then obviously new questions will come up. This is probably as simple as it is, right? When you have two candles, one large candle body, which is the second candle, right, engulfs the previous candle. So another one will be here. You see how the large candle body engulfs this one? So then really the previous candle, wick to wick, pull forward becomes the order block. I was explaining earlier, Dick, that order block works better at higher time frame. Right. So the lower time frame you go, the less liquidity there is, or the less money there is. So the less powerful or the less respected order blocks are. So remember that. So order block is better to be considered, yeah, shorting. The way you see short versus long, it's just the color switches. So in this case, right, this would then be, or over here, right, this would then be an order block for short. But then you'll realize how this completely demolished this order block, right? This price action didn't even flinch. Well, it kind of did over here, just a little bit. That's why I said there's two rules to order block, right? The first rule is you want to make sure that your order block is being considered at a higher time frame than your actual trading, because it will be respected more. The second rule is you only consider order block when you are trading with the trend. So if there's more buying than selling, right, you want to make sure that you're using the order block with the trend, not against the trend. Because when you're working against the trend, so like this is an obvious order block. So if I delete all these, and this is the last note, right, for this class. So if I delete all this, and this is a bearish order block, right, that's being created here. It's actually had an effect here as we have price action touching it and basically had a downward movement. And that movement was actually a 28% move, right? So it's pretty significant. But now we have a very strong uptrend. And this strong uptrend has so much buying demand, it completely demolished all the liquidity that was here, right? So it absorbed all that and didn't even mind it and completely went breaking through all the way up. So this is where you want to make sure when the strong trend is building, and how you know a strong trend is building. A strong trend is building is when you have continuous, same color of uptrend candles, and usually long candles like these. That tells you that there's a lot of huge buying power. You can also look at volume. So if I bring out the volume, you'll notice on the bottom here, starting here, you're building like 3 blue volumes, 1 red, or 1 white. For me is white. For you guys is red, right? And then 4 green, 1 red, 1 green, 1 red, 1, 2, 3, 4, 5, 6. We have 6 green, 2 red. You see how the volume was just very biased towards the green side? So that tells you there's a lot more people trying to buy than trying to sell. So the reason why this order block didn't work out, if you kind of really purely just look at volume, this was the order block size, right? Like literally the size of the order block was only this big in terms of volume, okay? But look at how much buying power there is. Literally, we have this amount of buying power versus this tiny little box of liquidity, right? Do you guys know why it didn't stop anything now? Does that make sense to you guys? Yeah, so if you never really understood why volume was a default option, right, for TradingView, it's because most people don't really know how to read volume. So it's very important to understand that, when you're considering order blocks, you're kind of looking at the actual amount of liquidity that's compared, right? So this is a pretty good indicator. Well, not indicator, but indication, really. All right, anyways, hope you guys enjoyed the class today. Remember, the purpose of my live streams is to teach you guys the fundamentals of trading and to be able to learn some of the basics, probably in the future, even more advanced ideas, so that you can apply your knowledge to the signals given in this channel and to be able to make, better decisions, to be able to have better outcomes in terms of following those signals and really know what you're trying to do, trying to accomplish. So if you realize something that, a lot of new traders, especially new people who's following signals, they're not very profitable. A lot of times because they have no idea what the heck they're doing. They're simply just punching in numbers in the exchange. And that is a very dangerous move, right? I personally lost a whole bunch of money in the beginning too, just because I was just blindly following signals. And then once I started understanding, okay, if I really want to make money in this, I got to learn the basics and, at least know what I'm doing. That's ever since then, I've been 100% profitable. Just I haven't really lost too much money at all, because I then completely forfeit the future trades. I only do probably 10% future out of all my trades, but I've been doing spot and I've been taking profits and buying back, buy low, sell high. I've been doing a lot of that, and it's been proven quite good strategy, and the signals really worked out then. Right. All right, so if no other questions, thank you guys for being here today. Appreciate you guys showing up. And, feel free to leave any comments or questions So then that will give me some ideas for the next streams. Okay. You guys have a great night. I'll see you next time.